Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Hump Day, Hump Day, Hump Day. Not only Hump Day, but Fed Day. It's Wednesday, the 18th of December, and we got a bunch of a couple economic news releases. And we'll start off with the housing starts for the month of November. So back in October, remember we had the the Fed was down, or the government shut down, and so some of these numbers were late. So this is for October, 889,000. So it's a little disappointing. But the forecast for November was supposed to increase to 963, and it came up to a whopping 1.09 million. So housing starts starting off looking good for the month of November. And then we got the building permits. So we got future house home creations or buildings and stuff. So for the month of November, so we had 1.04 in October. Forecast was supposed to come down to 990, and it came down a little bit, but still above a million at 1.01. So very good numbers right there, and it kind of correlates to, as we saw yesterday, the home builder index as to the confidence of the home builders out there. So this is obviously a good sign. Housing is looking stronger on its road to recovery here. And last but not least, we got, of course, the big day. As I said, the Fed day. We got the FOMC statement coming out here at 11 o'clock Pacific Standard Time. And at 11:30, Bernanke will be giving his press conference or his press release and answer questions in regards to the Fed meetings over the past 2 days here. So obviously today will be a big day. Expect some volatility, leading up to it, and even perhaps afterwards if there's any change. But so far, a lot of the surveys that are out there, they're kind of forecasting by 11% tapering. Arian, the guy from PIMCO, kind of projects it. He's putting it at 60%. So he's out there on the limb saying 60% chance they're going to go ahead and start tapering. But also don't be surprised. Maybe they may test the waters and do just a slight or very moderate taper. So maybe going from 85 to maybe like 75 billion. For next month, a slight, and just kind of test the water, see how the market reacts to something little. But for the most part, the majority of investors are kind of thinking it may start off maybe in March of next year, the tapering process. So if there is even a modest, or if there is any type of tapering today, expect some at least some short-term volatility here. The stock market will probably pull back because they'll probably get surprised by the announcement. Bond markets potentially could do the same thing, and then they'll kind of try to stabilize themselves as they kind of reach into the pricing. But what that's going to mean essentially is if the Fed does start its taper, it's feeling secure that the economy is going to be able to sustain itself and continue to grow without the stimulus package. Now, they are concerned, they are kind of a little surprised by what's going on with inflationary, with all its purchases, that inflation's still as low as it is. They're also concerned that maybe it's artificial, which that's my belief. It is artificial, and if they start pulling, maybe it'll start going back into a slump again, and then they have to start another stimulus package. So those are the things that they really want to feel more secure before they start any tapering on this. But also keep in mind, there's also something that has been talked about. Everything's been about tapering, but there was even talk that the Fed may even reduce the Fed funds rate from 0.25% down to zero. You may see some banks reacting pretty negatively. There's been some articles where the banks will start charging more for checking accounts and these such things if they go ahead and do such a thing. But anyways, we'll have to wait and see. Let's take a look here at the headline news. And currently, the stock market's been up and down a little bit because obviously the economic news was good with the housing. But now it's kind of pulling back a little bit for the Fed to make its release or its statements here shortly, and so kind of correct itself later in the afternoon here. So again, expect a lot of volatility today. And then here's how the bond market's reacting. It's down a little bit. It was down further, as you can see the wick on the lower end, but currently it's up a little bit further, up 6 basis points, which still brings us about 12 basis points lower than where we left off, or where we finished yesterday. So right now, so far this morning, it's slightly worse in pricing for the interest rates. This could change, obviously, after the Fed makes its announcement. It could worsen or could improve, but we are having a trendwards where the bond market's going down, and if that were to happen, it would obviously have to be pretty big news for it to kind of jump upwards to really break out of its downward trend and see some improvements in rates. But right now, with the bond market going down, rates are rising, and we do expect that into the new year that rates will be probably in the 5% range. So be prepared for higher rates coming in 2014. But otherwise, we'll have to wait and see what the Fed says today. Thanks for watching. Hope you guys have a great day, and we'll touch base on this tomorrow.